Equity, net worth, wealth, what is it really, and how do you measure it? I was part of a discussion group this last week where the question was phantom equity, perceived equity, meaning that a lot of people put on their balance sheet what they think they're worth, right? And that could include all kinds of assets. And some assets are more easily measurable, such as assets in a money market account or in treasuries, T-bills, bonds. The financial markets can put a number on certain assets, and if you sold those assets today, you would have a specific amount of cash that you would receive from those assets. And that's pretty much easy to figure out what your net worth is or what the equity is in those assets. But let's take other assets. Let's take a business equity. Well, how much is that business worth? Or let's take real estate, or let's take any other kind of illiquid alternative asset. Could be energy stocks, or it could be oil and gas working interests, that kind of thing. Illiquid and more difficult to delineate the actual worth is where the question was coming up. And a lot of people would say, well, on my balance sheet, I can say I have a property that Zillow says is worth, $250,000. Well, that's not market. That's just an appraised, estimated guess. And someone said, well, the way you really figure out what you have is you sell it. You put it out there and you sell it, and the market will tell you what it's worth. And if you have to pay some closing costs to get it sold, that asset sold, and pay some taxes, then what you net out after that, that's your real equity. And I would say that's true. That is your real equity. That's what you know really what you have, because until you sell an asset to the market that's an illiquid asset, you really don't know what you actually have in your hands as far as dollar value. Now, as we went through this kind of provocation, my question back to the people I was in conversation with was, okay, why would you sell a good asset that had good quality equity in it? And of course, the question comes in, well, David, how do you define good? And I said, well, or let's put it another way. Why would you sell it? Well, let's answer that question first. Well, one, if I need liquidity, if I need cash to cover some of their obligation, I might need to sell an asset and take what I can get. And that's when I'm going to find out really what my net worth is, right? The more motivated I am, the more discount I'm willing to take on that equity. So if I'm motivated to sell or need the cash, I'm going to put it out there and I'll figure out exactly what that's worth. I might also feel like I have an opportunity, not a need, but an opportunity where I could take the cash from that equity and put it somewhere else where I could get a better return. Or maybe I'm looking at the current illiquid asset, let's just say it's real estate, and it's had a good run, but I feel like where the property is located and maybe the tenant base, and maybe the demographics are starting to slide, maybe it's time to divest of that asset and move that equity somewhere else so I could get and sell it and buy something else, another investment. Maybe I could exchange it, defer the tax, but I'd still move that equity. So those would be the main reasons why I would sell something where I had net worth or equity, where I could get a better return, more reliable return, or I just needed the capital because I need to cover some of the obligation. So those are the reasons I'd sell. Other than that, I said the way to really measure the value of equity is on the quantity and quality of the distributions that equity produces. Think about that. Why do we have net worth? What is wealth worth if it doesn't produce something for us? Now, yes, there can be a growth component that we don't see for years down the road. I'm not opposed to growth. But in the end, what the people I work with want to know is, when I have this nest egg, wherever that nest egg is, stock market, practice equity, real estate, whatever you may own, is what is that nest egg going to net produce for me when I want the replacement income? Again, not opposed to having some growth, inflation hedge, but what's going to produce for me on a net basis. And when I look at the quality, meaning how strong is the production of income from that asset? How reliable is that going to be? Is it risky? Is it got a lot of fluctuation, or is it fundamentally relatively strong? What's the quantity? In other words, what's the actual dollar return on that equity? If my equity is a certain dollar value, then what's the return on that? Is it meet the market for what my risk and my needs are? That's how I look at equity. So I don't really care so much what the marketplace says my equity is worth unless I need to sell it or want to sell it. I care about the quality and quantity of the replacement income it produces. If you look at your wealth and your wealth building, what you invest in, what you're creating that way, it'll give you a lot better idea of what you really have or what you really need. Too many people get hung up on, well, I need 10 or $15 million to retire. Well, do you really? If you haven't assessed where you can move that capital to get a predictable, sustainable, reliable income stream, then you really don't know what you need. It could be a lot less than you think, but you haven't been trained, you haven't learned, you haven't had the discernment to figure out how do you allocate your capital other than just putting it in the equity markets and the stock market. And I'm not opposed to having money in the stock market, but I just think that's not where you want all your capital, because that's an accumulation game. It's a growth game, and then it's a depletion game. I'd rather accumulate and grow during my active income earning years when I don't need the replacement income, and then know how to take that capital base wherever I've grown it and turn it into replacement income. Best place I know to do that is in alternative investments. Dividend stocks typically don't pay a lot in dividends. So if I stay in the stock market, I'm just going to be depleting my capital over time. I want to put my investment capital in something that's going to return a reasonable market-based return that I can count on. I can do that in real estate. And that's where I put most of my capital. Different places at different times in the economy. Not always equities. Sometimes I go in private credit. But those allocations are something that become another level of discernment as you learn how to allocate your capital. This is the big question that everybody has when they come to me and say, David, I'm thinking about selling my practice and I just don't know if I have enough. This is what we don't learn as we go along in life because we're so busy making money and getting good at that we don't learn how to make our money work for us. Knowing what your real equity, your net worth, your wealth is really worth to you is a key to freedom in your life. And I hope that you will take the time to discover what you really have and what it can do for you if you know how to do it. And that's one of my greatest provocations for this year in 2025 is understand what you're working toward and when you can take the fruits of your labor and turn those into income that works for you. That's when you have true freedom in life.